Hi everyone, it's Stuart here. Welcome to Friday, the 6th of December. It's non-farm payroll day again. It seems to come around really, really quickly. As you can see here on our, let's stick it up here. You can see here, oh, what's it done around? That's strange, isn't it? Let's go back to where we were. I think it's you can see it a wee bit better now. Where we are. As you can see here, we're about 10 or 12 minutes away from the headline. Headline number around about the 200,000. The range is relatively narrow, actually, for a November number. I made some notes of it this morning. We're in a 150,000 to 275,000 range, according to the major central banks. Both the Reuters and the Bloomberg average consensus is right on this 200,000, 200,000, 202,000 within a smidge of each other. The major tight range is really that 180 to 225,000. So a big bounce back, obviously, from the outlier from last month, following the strikes and the two very disruptive hurricanes. Speaking of which, there's a big one. Storm Dara is due here in the UK tomorrow. 90-mile-an-hour winds. A red wind warning has just been issued by the Met Office in the UK. So particularly for the west parts of the UK. So that's a bit one to look forward to tomorrow. Average hourly earnings expected around about 4.2% on average. Last time we come down to 3.9%, so this is expected to tick down a wee bit. The monthly earnings are holding on to the 0.3 of 1%. Unemployment possibly ticking down to 4.2% as it's got here. This is consensus as well. It's also rising again, but participation rate one to look particularly to, I should say. Where's my U7? My U7 unemployment rates disappeared. Where's it gone? Oh, that's decided not to be on here. So it's just the headline. 7.7%. Remember last time. Where's that gone? Why has that disappeared? U6. There it is. Sorry, U6, not U7. 7.7%. So watch that as well. That's a wider measure of unemployment as well. So I hope you're all well. Obviously, the political situation in France remains dire. Situation in South Korea is not great either. Potential martial law again. So that, as we said yesterday, it's sort of being contained at the moment. But if we look at the charts, this is the gold chart today. We've been as high as 26.45 this morning, and sort of not early, but sort of 10 o'clock time, 10 o'clock time. London time this morning, having been sort of spiked really into the 2600 range. Although we were still $12 above 2600 itself, we did move down quite significantly this morning. That's recovered very significantly as well. So it's about a $30 range. So far in Europe, we've been as low as the 2630 sort of zone here. Well, let's just stick that in for see where it moves us on the data. There we are. So 2632 here in the last couple of hours. Let's make that, get rid of that so we can see that a bit bigger. Make that a bit bigger as well. Yeah, so that's the range for gold so far in Europe. 2638 is this top. Sorry, 2645 is this top, and 2632 the low. So watch that as the main data rolls out. Euro. This morning, I think I put some on. Yeah, I've done this earlier. So here on the 15-minute chart again, here's last night closing. So we were sort of down into close yesterday. We tweaked down in early trades to 105.65, and we've been as high as 105.94. So another 30 pip range, if you like. Just excuse me, let me just get a quick drink of. A quick bite to eat before I came on, and I probably shouldn't have done that. There we go. So it is. I say, let's just put the caption on. So it is non-farm payrolls. Then we will do a weekly wrap as well. But say euro in a tight range. It's had to go at 106. You can see here. If we just take this up to the hourly chart, we've had a a bit of a rip-roaring week. 105 was breached just on Wednesday, and then we rallied and came up again within the smidge of 106. But again, we didn't. This the thing we've seen this morning is we didn't get quite to the high we'd got towards the end of November here, where we went to 105.97, which looked like we were going up, didn't we? And then we collapsed all the way down to this 104 range we'd been in this week, as well as December has kicked off. So bias to the upside. The hourly 20-hour moving average is at 105.75. See what the non-farm payrolls make of it. The markets are getting not long, but looking to let me just see in the chat in here. No, we're looking, a 70% chance now of the Fed acting in December to cut rates again, 25 basis points again. It's around about 60% for the Bank of Japan to go the opposite direction. So again, if you look at the yen, back over 150. This morning, having been under and as low as 149.80 in early trades this morning. We're just crawling over there. So we'll back test this next resistance area at 150.55. And you see this sort of top here we've got here on the hourly chart from yesterday. So we're at top end of that as well. So dollar up against the yen as well today. Sterling cable here at 127.70. Again, pound stronger today, one of the stronger currencies. It's also been on bid today. The Antipodeans, the Aussie and the Kiwi particularly weak. We had a big rally in our pound Kiwi trade. So pound moving higher. Today we've been at this low 120.40, this area we had on before, and 127.78. So if we get the bounce back that the market is anticipating, is 200,000, we get private payrolls around about 150,000, 200, 160,000, employment ticking up a wee bit. Participation rate will be interesting, given the sort of shakeout from the major strikes and the hurricanes from last month, and see if earnings is getting a bit hot as well. That might fly in the face of some of the weaker employment rates we had yesterday. Remember yesterday, go back to yesterday, we had the claims, the weekly claims ticking up and about 10,000. So it was it's quite a significant lift, although it's still very, very strong jobs market in the US. I would continue to argue around about that 220,000 level on the claims. We were getting down to new sort of 2.5 year lows, weren't we, at 214,000. There'd been that disparity with the continuing claims start to tick up, so the weekly ones have ticked up. So see if this bounce back is as strong as anticipated in the non-farm payroll data. Remember the where are here non-farm payroll data. Remember the major spreads around about 150,000. So anything over that, certainly anything over 200,000 will be seen as a positive, very positive for the dollar and the economy as well. Other news overnight was the appointment of Jake Perdue, a former CEO of PayPal, being Trump's right-hand man as far as China's concerned. So that's a businessman with obviously former senator as well, with a political background coming into negotiations with China. And obviously tariffs is very much top of the Trump agenda, with China, Europe, Mexico, Canada, all very much in the crosshairs. And obviously the implications for the Fed and inflation, everybody's been talking about since the election itself. So very much another loyalist, very, very key appointment as well. Obviously some key appointments, as we said earlier in the week. His new man at the SEC, or his proposed man at the SEC to replace Gessler, Mr. Atkins, very pro crypto and we saw that big rally yesterday and in initial shakeout as well. It never ceases to amaze me the way crypto can move around, particularly Bitcoin. So we're back to nearly 98,000 this morning. A big shakeout yesterday. If we got the daily chart, you can see quite how dramatic it was. That smashed through 100,000 to 103, 104,000, and then reversed yesterday incredibly aggressively down to 92 at one point, wasn't it? 90,000, 91,000 in fact here on that candle there yesterday. But we're back up this morning. Oh, we were back up into close yesterday, and 4-hour chart's probably a better time frame. Yesterday, and sort of back to 98,000, 97,000. So we're still obviously very well bid on the cryptos. We've had a fantastic run, certainly since election day, as we said. So a couple of minutes, let's just bring the euro back for the crosses not clicking on. So the euro here, let's just go back to the you see it's been bid most of the week on the same been under this 4-hour, this is the 4-hour candle. So will we text 106? Will the data support a rally to 106? Let's put that on. Let's put the 5-minute candle on. In fact, let's put the 2-minute candles on, and I'll let me flick. So that's our upside. So remember, we don't want to be moving here. Well, again, it's biased to the upside. So let's just bring the calendar up as the data rolls over in the next minute or so. Or let's just watch the chart, shall we? So here we're sort of here on the 2-minute chart. See how we're pivoting sideways. Nothing really happening 108. So we're as the data's breaking, it's a positive euro reaction, a negative dollar reaction immediately, hiking through 106. So new highs of the day, perhaps triggering buys through 105.93. Let's just see how this all settles on the reaction. Sterling will also be higher, no doubt. Sterling higher, euro higher, and dollar CAD. And the Aussie, that's been really weak all day, has rallied, has moved back from where were we, 64.13 sort of zone, 64.30, but still well under the .65 area for the weaker euro, weaker Aussie today. So euro on the immediate reaction. So let's see if that's updated. No, it hasn't. I have to refresh. That's really annoying. I'm going to lose all my settings, aren't I? Just today, thank you. And I've got all the other defaults, Matt, which is particularly annoying, and that's obviously going to grind. So, not good. So let's have a look. Where are we? So we are in that 27,000, better than expected. The headline 227,000. Participation rate, I said that was key, sort of flattening out. It slipped a tad. Private payrolls, that's positive. That is a positive number, 194,000. Yeah, so that's that's pushed. That'll be pushing the Fed now to definitely, not definitely go, but looking likely they will go. Unemployment hiking up, which is again what the sort of been angling for. Unemployment back to 4.2% from 4.1% last month. Again, that's they won't be too bothered about that. The Fed, it's CAD Jane today. I missed that completely. Why does investing.com think these are low impact events? Canadian jobs data. Anyway, 50,000 in Canada. So we'll have a look at dollar CAD in a minute and see how that's moved. So that's again showing the resilience of the US economy. Some signs of jobs perhaps staggering a bit from yesterday's weekly claims, but it was that was a bit of an outlier compared to the trend we've been going down, and we've bounced back. We've bounced back better than expected. 227,000. Last month's been elevate from that way crazy 12,000 to 36,000. That's positive as well. manufacturing payrolls missed. That's not such a big deal. You'd like to see payrolls in the government down a bit. Yeah, average hourly week in line with expectations. Last month's was revised a tick lower. Participation rate still relatively healthy at US participation. Where has it gone now? US 62.5. So overall, that's a good. That's positive. That's sort of thing the Fed would want. It's at the top end of expectations. Over obviously top end expectations. I'll say some we're looking at 275,000. 225,000 was the core where most analysts were looking, and banks were looking for it to be. So 227,000 is good. Participation rate, yeah, that's good. So you got as you might expect, a weakening dollar on anticipation that the Fed will definitely go. So that's where are we now? So that's happy to hold this long position. 6 for the euro here at 106.25. Side sterling similarly will have come. Sterling similarly has moved on the weaker dollar on that data and breached the 128 level. Sellers at 128. We're happy to have that's a while since we've got up to so the 4-hour chart. Last time we were up at 8. Oops, it's 2 minutes. Sorry. Was all the way back here on the 12th number. So sticking area at 128 potentially on the short term move on farm pay. A weaker dollar is the upshot. Let's have a look at what oil and gold. Gold's 2635 hasn't really reacted, has it? The gold on market. It's a 4-hour chart. Sorry. Doesn't look like it's moved. Yeah, a bit mixed, as you might expect. Well, yeah, you'd have thought perhaps gold would have moved a bit higher on the weaker dollar. That's the argument you could place. So for that 5-minute chart, huge volatility under the low of the day. Didn't get to the higher day, which is interesting, isn't it? 2631. Sorry, it's not the low of the day. That was the European session, wasn't it? 2635. So we tested that. We bounced off of that. So that looks relatively positive. Or it should be relatively positive for gold and weaker for the dollar. But we'll see how the analysts think those numbers and see how that impacts the likelihood of Fed. Likelihood of the Fed. Here's Forex Live, which is a free internet-based news site. There's no comment so from these guys, but it was a good beat, and also see here good beat for the Canadians as well. Gold edging up a tad. It's nothing too positive, but ended positive. It was negative, wasn't it? This is a 5-minute for gold, so 1336 able to place bids on that now as we tick up to the upside. Let me just go back to the pre-market indices, how they've reacted to this. Let's look at the dollar index itself, 105.50. So that, unsurprisingly, has come down, like gapping lower. Again, I'm not sure many of you trade the dollar index, but we've been moving lower yesterday and obviously today on the major data. That's taken us low. Got the 4-hour chart. This might be a weaker dollar's continuing trend yet. So we're back to where we were here, the 12th of November. So significant move lower for dollar index, and again, it's just added to the move lower currently on here on this 4-hour chart on the dollar index. Again, all depends on your time frames, guys, about what positions we take. But remember, the dollar has been weakened. Down candle here on the 4th earlier this week, a couple of days ago, and it's legged lower yesterday, and we're legging lower currently as we speak. Euro back over $106 sterling over into 128 it was, wasn't it? And euro, we didn't check the yen, did we? Yen, yen 150.16. Let's have a look at that. That chart's moved again to the downside in these first few minutes after the data has dropped from a high of 150.700 this morning. We're back to test the 150.00 level on the data. It's obviously some buyers around about the 150 level, but moving to the downside. So it's a negative dollar reaction. We should see stocks perking back up. We had a flat day yesterday. Well, it was better than the day before. We were at just 10 points. In fact, no, it was flatter than the day before, wasn't it? Thursday closed at 6.5 for the S&P 500. So stocks should be positive on the back of that. 6,091 here on the. There we are on the back of the weaker dollar. We are again another one. Today's range was completely blown. I'll actually take this up to 15 minutes. See where we were for the day. Where's the 6 started? It's here, isn't it? So yeah, immediately through the day high. Also, riding with this data, testing the day low, but positive here. The 15-minute candle isn't yet complete. 10 minutes, the first 10-minute candle is complete, and we're into the second one. That's positive. The 5 minutes, which we now be back in the market, is positive. So that's bid 6,092. Yesterday we got through the 6,100 level, so we didn't quite get there. But last night's high, or yesterday's high, at 1740 London time, was just shy of 6,100. So that could definitely be in eyed today if we continue to move to the upside. So stocks positive, dollar weaker is the immediate reaction to the market on a good, strong non-farm payroll. 27,000 is the headline. Last month's was revised significantly higher. It was obviously a bit of an outlier. Participation rate still hold good. Unemployment rates ticked up, but only by 1 tick, which is in line with expectations at 4.2%. Earnings are also holding up at 4% on an annualized basis, and ticked up for November as well, better than expected at 0.4 of 1%. So all of that will possibly drive the inflation outlook, along, more importantly, what Trump guys do in the next couple of months as they get in under the desks in their positions in Washington. So the Fed looking to cut for December. That's ticked up a bit higher, I would guess. On, let me find the CME. Fed Watch tool. There we go. It's just I can't share my proper feed, but this is just a free tool, guys. We'll have a look at that. So yeah, close shy of 78% yesterday. I'm not sure this is reacted perhaps come down. It's over 70%. Yes, I thought it was. Yeah. So back to 68%, a tad at the moment. I'm sure that's actually updated. To be honest, it being a free. It won't have reacted to the data just yet, I don't think. Yeah, there we are. What leap on that? So you saw what happened there. The pre non-farm payroll data would be 1%, 68% from 71% yesterday, and we've leapt to 88%. This is a chance of a cut in at the next meeting in a couple of weeks' time. The announcement date, isn't it, as well? Interesting to see what the January forecast look like now. Forecast 68% now, close to 68% now. 450 to 425, the 25% chance now of down to 4.25 by January interest. But yeah, so that's heightened the chances significantly of a cut in I say the next meeting, which is why we've seen the weaker on that reaction on stronger stock markets. So stock markets bid on that to the upside. Let's see what we did with the majors. If the euros come back a bit, euro 1.1. So we're holding that still. Immediate reaction was to the upside. So we could bought here on that first 5 minutes, 106.14, and we're up there. Actually, sterling's also holding the 128 area, so shorts aren't in play by the looks of things at 128. Come out longer, but again, that's bid and dollar yen 150.05. So looks like the 150 area may give way later on. There's still some quite significant, not significant, significant data to come today. We've got the Michigan consumer expectations and consumer sentiment as well. Let's remember the consumer remains very, very key to the future of this economy. 68% of it is consumer-driven, consumer spent. How they're feeling their sentiment numbers, although they are sentiment numbers, not hard data, it still plays significantly into expectations for markets and how markets react to that. So watch those University of Michigan later on today. So nice, And again, if I was sat in the Fed or even sat in the outgoing Democratic Treasury, that's steady numbers. Is it a concern that inflation's ticking up? Not too badly, but it's still round about full employment 4%. It was getting down to come back up. Inflation's got down, come back up a wee bit. Things are pretty rosy, pretty positive for the US economy. See, some of the dreadful data we've seen in parts of Europe over the last few months. Everything seems fairly a nice, hefty, significant beat. As you might expect, the markets are sort of playing out currently in the direction you would expect them to, and that's quite a good beat for the headline numbers. So, weaker dollar, better stock markets. I haven't got to the treasuries. Treasuries would have probably weakened with the with the dollar as well, and a big jump in expectations from 60, whatever it was, 68%, wasn't it, when we first came in here, to 83% now. See if that's cooled a bit more. If we update it, no, 83, no, there we are. For the Fed to act in December, so that's getting baked in now. Anything over 80%, that's virtually baked in. So now, what the inflation data looks like next week as well, and if that's even more. So if we just look at next week. Why won't it show me next week? I need to go there, don't I? So next week, a raft of inflation data. Monday is led by GDP data out of Japan, inflation data across the globe next week. Wednesday is US inflation data, the 11th core CPI, drilling down, so we'll be live for that next Wednesday, the 11th. That's the key of the week, really. And it's the final, piece of big data before the Fed meet the following week. So non-farm payroll has weakened the dollar further. Expectations that the Powell and Co. will cut on the 18th. See what inflation number looks like next week. Obviously, PPI backs that up on the Thursday, and there we go. The big headline data is starting to cool for the end of the year, and so last big trading week next week for many people. But as I've said before, the last 2 weeks of the year can be some of the most sort of well, probability wise, easiest to trade. The likelihoods of say rises in stock markets are very at this time of year typically, and that doesn't look like that's going away with this anticipation of a further weaker dollar. The Fed looks like they're definitely going to be acting next week, which many anticipated anyway. So the strengthening of the dollar has been bounced. So a bit of buying here, as you might expect, at 150 for dollar yen. Euro back to the 106 so we might come back to hold. If we hold the 106, that's still positive for the euro in the higher time frames. These are the hourly time frames this week. The 4-hour also sort of drifting, moving up from a 5 over 106. So a hold of 106 would be good to close out today or this week. Whether we actually do that or not, you see here on the 4-hour time frame, so quite a big, thick distance. So was that data strong enough to keep it over 106 come the end of the day? And this is what the daily chart looks like for euro. Right on. The reason I'm talking about 106 is because that's where our 20-day moving average sits. We had a strong day yesterday from the rally from under 105 this week. So if we hold over 106 today, again, that would be positive for the dollar over the key 106 there. It'd be over the key 20-day moving average, and then the next target to the upside will be 107 to close the month. But we'll see. We'll see if we can actually do that. It's our first attempt at 106. First time we've been over 106, as you can see here, for the best part of 2 weeks. Couldn't do it. The first attempt, second attempt, we couldn't hold it. Here's our third attempt. Are we going to close over 106 to close the day out? We'll see as obviously the day closes. But so far, it's been for you short-term traders, intraday traders. We're now 20 minutes into the post data. So the 15-minute candles are complete. So it's a positive, big first 15-minute candle. We're retracing currently, but we're still above 106. That'll be key, as I said, certainly for the end of the day traders. But it's stronger stock markets on the non-farm payroll data. Okay, so if there's no questions, anybody, any data you want to have a look at? If we just we do the wrap the week really, although obviously the US market day is still yet to start. It's been I forgot the daily meetings as we've just seen there on. It's been a positive week for euro against the dollar, so a weaker dollar. But can we hold the 20-day? That's really what I'll be looking at, and how much over this 20-day moving average in 106 area we hold at. I mean, we could also come all the way back down to our low of that. That was that the low of the day. I think it not the range, wasn't it, of the European session. So yeah, see how that finishes on an end of day basis. But euro relatively well bid. Sterling's had a good week as well from the lows here on Tuesday. Currently 127.95, so we've gone back under the key 128 area, but again there was the big break for sterling as we went over the 20-day moving average, and that would have triggered some long positions with these moving averages turning around from the lows under 125 towards the end of November. So it's a first end of day long position here for a while on sterling, coming back up against the weakening dollar. Dollar yen this week again has been generally pressured, but a bit of a consolidating week, given the amount of political shenanigans that have been going on around the world, and the situation in Japan as well. So 150 still looking quite weak hold, I would argue. The 20-day, I mean, even here, this is the green line is our 9-day moving average. That's the 50, that's the 20. So it still looks like that it's that 150 gives away significantly. We could move aggressively down to these 140 levels again as well. Tends to be a stick, and the rally up. You can see here that was a decline because that was a strong 10 moving down, but we've moved up quite nicely from September through October into these highs in the middle of November. So by the middle of December for dollar yen, will we have breached the 140, the 150 area and test the 140 area, which takes us all the way down to these lows here at September. So see what happens as that goes forward. But a relatively sort of consolidating week for dollar yen, but a diverse in policy from the central banks, but both have got lots to say before the end of the month. I'm actually talking about dollar CAD because Canadian jobs as well today, which we sort of skipped through, given that it's low impact account of investing.com. I would argue difficultly about that. But again, positive numbers out of Canada, 50,000 from 14,000 last month and 25,000. So a very good numbers for Canada. Although the caveat there is that quite a significant in the unemployment rate up to 6.8% from 6.5%. But certainly people getting back to work in Canada again. So as far as the dollar CAD was concerned, it was the other way around here. We got a stronger dollar against the against Canadian dollar to the upside. So weaker dollar against euro, sterling, and yen. And it was up here against the Canadian dollar based on that tick up in unemployment weakening the Canadian dollar. Well, how long that will last, we'll see. But 141 wasn't within its sights today. Again, if we go up to the time frames, we yesterday, earlier in the week, we'd been to 140. 90 zone. We've been through that on this data so far today. So if we got the foreign, I might just get it to fit. Sorry. We've we've been moving down all week, consolidating lows, and then this payroll data for the two economies has turned it around. 141 again can't be ruled out, but again we'll see how we finish the day. But moving up 140 all of December to the upside, and 141 now back in sight eventually for dollar as we roll into the weekend there. Again, if you look at the daily time frame, consolidating highs above the 140 area, but rate 141 if we're going to take this higher. So on the 20-day, providing great support there for this strong trend, which still is in place, although we're consolidating highs, which is still positive. So moving to the upside. So we'll look at oil. Given our we got messed about. I didn't manage that trade. I should have got out the oil trade earlier. It ended up hitting the stop loss. What am I doing? I'm trying to find not the oil panel. I want the trade panel back up. I don't know. The markets panel. You're forward. If we look at oil, we're down to 68. So we're 67.60 again today. So we're lower again today. So it's 3 days down. The OPEC meetings capped the rally at $70 on anticipation of the OPEC meeting, and then we've moved lower. Well, we were long here, weren't we? Sorry, I'm just talking about the trade earlier in the week. We got long here, and we were looking for 70, 75. We got to 70, 56 or 60. We got within 10 cents of our initial target, but then it reversed, and I meant to close it out on the day I didn't. It actually got stopped out yesterday at the stop loss at 68.50 something, I think it was, wasn't it? But we've gone lower again today. So it's a rejection of that 70 handle. We're back under the 20 day moving average. So that really should have been a short on the close of that day. So I got out of that long before it hit stop loss. But anyway, that's what happens with trading, my friends, if you don't keep on top of stuff. So I had to take the loss for the stuff we posted up on our Discord platform, guys. So do follow us on there. So and do comment and join, because we were doing. I've started posting some posts this week, and we're still out of the pips because there's been some big moves against us this week, despite Bitcoin hitting 100,000. So 67, yes, 67.30, 60 at the moment. So 67 is back in the crosshairs. And you can see here what it's provided support here, provided relative support there. But again, another one that's got an outlier on its horizontal right. Back here from September, which took us to 65.50. A significant improvement. We can quite quickly get back to that, but buyers certainly at $67 a barrel so far this winter for oil markets. But again, as you can see on the daily, the lows are getting lower. The 50-day moving average is up there at $70.65. So we can't, and it's flattening out. See how it's flattened out. The 20, the thicker red and magenta line here is moving, still moves, but down, trying to catch a bounce up on the third. Didn't happen. Turned on the fourth. As I say, that should have been a continuation short trade really on the fourth. We're down yesterday, and we're down again this morning in the US at 67.50. So 67 is in the crosshairs. If that 67.50 area breaks for oil. And finally, let's finish with everyone's favorite, which is gold. See how gold has come back a bit, 635. So we're back inside the 15 minutes. So we're back inside the moving out, or under the moving averages. So what looked like a move benefiting gold has actually been absorbed to the downside, to be honest, on the 15-minute chart. So if we just got the 5 minutes now, gold was positive initially. So there's the one. There's the this is the 5-minute guy. Remember, so the first reactions was a positive gold move, and now that's reacted back down. So we've got strange. Some 30 minutes after the data, we're back to sort of where we were, sort of moving to the downside here on these 5-minute charts. So it looked like we were positive. All got wiped out, got lower again, bounced back, but not to where we were pre-data. Send another one that's under its 20 period moving average on the 5-minute chart. But obviously it moves around very quickly in the 5-minute time frames of the US stock market open. See if the stocks have actually held on to their gains as gold's given back the numbers. So again, a bit stocks are holding better than certain gold. So again, stocks being ahead of open, which is in 30 minutes time. So if there's no questions, anybody say next week, really all eyes on US, global inflation numbers, but the US numbers come out on Wednesday next week, and you can see there's next week and the following week with data it starts to dry up. But these 2 weeks as well, this Christmas week and the final week of the year, don't not be in the market. There's a lot of opportunities, and obviously 2025, lots of opportunities from us at proptrade.com. So do join us. Lots of challenges, or very solid challenges, I would argue. If you think you want to jump in straight away, there's only the one stage the Express Challenge guys and girls traders go with the standard 2-phase challenge, and obviously you can start from 55 to buy a funded, buy a challenge, pass the challenge, and you can fund it. You hang on to initially 80% of the winnings, but up to 90% and up to 95% on the pro challenge as well. So decide, your level, 50, 25, nice sort of fund to be using, especially if you're going to be actively trading Forex. But follow the rule again, like all prop trades, properties. You have to have rules. You have to stick for the rules, and we're no different to anybody else. PropTrade.com, better than many, simpler than many as well. So do come and give it a go. And if you need some help, that's what I'm here for. Me and my colleagues around the world are all here. So the best of luck. Have a great weekend. Stay safe, and let's hope the storm Dara isn't as bad as saying here in the UK. So